So let's have a chat about natural gas because it's back above $3 and there are several factors driving the price. So we're going to look at those and then have a gander at the charts and see what the technicals could tell us about where the price could go from here. So let's run through some of the factors influencing gas markets at the moment. And in the very immediate term, we did get a little bit of movement in, broader markets actually, off the back of news that there had been something of an attack on a gas pipeline between Finland and Estonia. Now, the details are a little bit scarce and the perpetrator of the attack isn't well known, but it sort of underlines some of the fragilities in European gas supply. Once again, we do know, going back to the start of the Ukraine and Russia war, that gas can quickly become weaponized and, pipelines can quickly become targets for attack as, if nothing else, a warning to combatants or adversarial countries that the energy assets can be quickly compromised and obviously weaponized as well. So this particular attack was quite coincidental because it came around 12 months since the Nord Stream pipeline attack, which still it is speculated. There is still not a great sense of who was responsible for that, whether it was a Russian attack or whether it was an attack coordinated perhaps even by an ally of Ukraine to try and generate some kind of hostility to Russia and also obviously galvanize certain players in Europe to take a more assertive response to the conflict in Ukraine. So there's all these kind of questions as to what's going on there in the pipeline between Finland and Estonia. Fundamentally, though, it does raise those concerns about supply and energy security in Europe, and that has had the effect of pushing prices a little bit higher. Of course, there is the geopolitical element to things too right now, and it's hard to go past, obviously, the tragedy occurring along the Gaza Strip and the attack implemented by Hamas over the weekend on Israel. Now, clearly we want to steer clear of the politics of the situation right now, but it does have to be said, it has ramifications for global energy markets, not directly gas supply naturally, but of course we are concerned that maybe an escalation, one that perhaps implicates Iran in the attack, whether it be supporting via funding, resources, military planning, or even just knowing that the attack was about to take place, raises a risk of sanctions on Iran, both in terms of trade sanctions, but also sanctions, financial sanctions as well, that could potentially cripple Iran's economy and have that sort of effect on global energy output and further restrict supply. Of course, we know that there are already major sanctions on Iran and Iranian oil. Now, again, we're talking about natural gas here, but any impact on the oil market will flow through to broader energy markets. So we are paying attention to what's going on there just in terms of, again, the ripple effects through to natural gas prices. The economic backdrop remains very interesting as well in terms of maybe the more demand side drivers of natural gas. And there's a little bit of a sense that maybe the global growth outlook isn't as strong as previously thought. In particular, gasoline prices and gasoline margins in the United States were brought into focus a few weeks ago when we did get an update from Henry Hub about supplies and, maybe some inferences drawn there that demand is a little bit weaker for energy, and that might require lower prices going forward. Of course, this is all coming as policymakers by design try and slow global economic growth and, by extension, demand for energy by raising interest rates. We've also seen a stronger US dollar as well, which has the effect of dampening commodity prices. Overall, though, this does seem to be still a bit of a supply-side story for gas, and we'll go back to those supply-side factors now. Going into, obviously, a very important seasonal period where, if you take a look at the natural gas futures curve, we're getting that seasonal rise in prices now, and that seasonal increase in spreads between the front month contracts. It has to be said, those spreads have reduced actually over the last month or so, something of a factor of obviously getting closer to the energy intensive season and more certainty around supply as we approach that period of time. But there is a sense that at least for this winter in Europe in particular, the weather mightn't be too extreme. And that, of course, this is the other important factor as well, is that storage levels in Europe remain very, very ample. So you're talking about 80, maybe even 90% full in terms of storage there, in terms of gas storage in Europe overall. And that has come as Europe has tried to diversify its supply chains and ensure that it has greater energy security by importing less from Russia and increasing imports from other parts of the world, chiefly Norway and the United States. So that's something that is providing some level of support for prices, or at least putting downward pressure, I should say, on prices in the short term. But in the bigger picture, there is these outstanding questions, of course, about, well, what is the structural factors driving price action here? And we're still dealing in an environment here of, well, significant underinvestment in gas assets, the closure of some gas assets around the world, and the concern that maybe as the transition to renewables sputters along, it has to be said, and is perhaps not as effective and as swift as many policymakers would like, any household potentially would like, is that we are seeing this kind of structural shortage deficit developing in the market, and that perhaps the market is more sensitive to shocks, a little bit like what we've seen as a result of what's going on in the Middle East, a little bit like what we've seen as a result of this, well, very mysterious attack on a pipeline between Finland and Estonia, that because we know that there's these structural problems in the market, and even though we do have ample supplies in Europe, we're only one very, very unseasonable weather period away, or perhaps a shock away from those storages being diminished, not being able to be adequately resupplied, and a real run-up in prices ensuing because of, again, another supply shock. So all of those things are playing out, probably the reason why we have seen natural gas prices pushing above $3 once again. So let's take a look at some of the key levels we might be eyeing off as we watch the natural gas price. And as you can see here, it was actually quite a constructive little setup going into this breakout recently for the price. A series of higher lows on the weekly chart, and a break above the 50 level on the weekly RSI, all indicative of a market that was poised for a turnaround and ready to break out to the upside. So the break we saw above $3 per share has invited, obviously, buyers back in. We're seeing a little bit of resistance around that $3.40, $3.50 mark. Worth noting, of course, too, that we do have at around $3.80 the 200-week moving average, which could be a fairly key level, if nothing else, to mark a little bit of a reversion in the longer run. The next major level of resistance up here at around $5.20, but clearly a lot of wood to chop before we get to that particular level. Let's just have a look at the daily chart before we wrap things up too. And as you can see here, clear signs of a breakout through $3. But in the short term, we're starting to see signs of some exhaustion in the price. The daily RSI moving well into oversold territory and now showing signs of downward momentum building, which is typically the best way of reading the RSI. It's that turn lower in the indicator that suggests that maybe those oversold conditions are starting to manifest in a pullback. We could be seeing we might see a little bit of resistance here at around $3.40, we'll call it thereabouts, where price may consolidate. If it breaks through that level, well, perhaps we'll get a bit of a retest back down into the low threes or so. We'll continue to keep an eye out for some of those supply factors that we outlined, which seems to be really driving the price at the moment. So there you go, some key factors driving natural gas prices at the moment. Some key levels to watch potentially too, as we see this move higher in prices to what is year-to-date highs for natty gas. So keep an eye on some of those supply issues, obviously on top of that as well. These potential conflicts around the globe. It could get reasonably interesting now that we're starting to see clearly some interest picking up again in natural gas.